All right, what in the hell am I doing here? Well, let's see if this is actually working. Let me see here. Hmm. I might have to refresh. Let's see if this knocks me out. Okay, there it's back. All right. Hey, it's Delay in this episode 379 of the Orange Pill Investor. Not sure what was happening with the audio there for a second, but I couldn't hear the intro music I was trying to play. So hopefully we are cooking with gas. Gonna jump in here and try to nab a couple of covered calls while the iron is hot. Sometimes I run my mouth and then the price will drop 20 bucks a share and I missed out. So, and the price didn't crash while I was eating breakfast. So that's good. What's up, Emperor? What's up, MCRL? Deeply. Dr. Rand, thanks for confirming it's working. Hopefully, I didn't screw it up with the refresh. We're gonna need to pump the music again. Oh, you could hear it. Why the frick could I not hear it? I wonder if huh, my AirPods are connected. Who knows? It sounded like it was no sound. All right, cool. Oh, so because I refreshed, no share. Thank you. Let's try this again. Okay. Yeah, I don't know what the hell I bumfuggled this morning. So let's hope I trade better than I broadcast. I'm gonna try to nab this little, quick pump in the price. I had sold all of my covered calls on my PMCCs yesterday and basically just kept this one poor man's covered call around and kind of swapped it over to my shares. And I'm not going to go too crazy with this. Like, I don't want to just load up on covered calls and then we go to 400 a share or something in short order, but maybe just add one or two. And let's see, do I want to throw caution to the wind and sell a weekly at these prices? It's Tuesday, so I'm really only going to get about 3.5 trading days. Could go like slightly out of the money, get 500 bucks, or do the not really even 45 days to expiration because I can't get May 9th. So jump in here and go to 38 days, which is where I've been this whole time. And one standard deviation would get me to the 430, and I don't have one at 430 yet. So let's just do one more. Oh, I should have checked MSTY. I'm still probably down like 5 or 10,000, but I've bridged most of that like $20,000 gap that I was behind. So getting closer. All right, joint account again. I added well, actually, I never took these poor man's coverage calls off. So I could take off some of this leverage. Just gonna do one of the three. Actually, you know what? What is Tesla trading at? $278. So we bottomed at like 220, 225. Oh, that didn't fill. Still didn't fill. All right. Let's just keep walking this down for a little bit. Okay, we got to fill. That gives me 14 to play with. What was the poor man's covered call that I did in this account? I grabbed. Holy shit, why did it take so long to scroll? All right, I did the March 200 strike. Okay. Oh, I'm not scrolling again. I'm going to go ahead and set up another one of these with the profits. By the 200. And as long as I sell like the 310-ish, I should be good to go there. 325 gets me right to around the expected move. So let's just go for that. And what do I do with 4 grand? Let's go See how cheap. So June 2027, that is over 2 years from now, and Tesla will probably be trading at, like, uh, 1,500, so that seems like a bargain. What's left? 700 bucks? Let's group these bad boys up. Any profits that should be taken here? What is that, like 30%? Huh, forgot about this December 380. 0.59 delta. It's getting closer to being able to sell a poor man's covered call against, but not quite. My Julys, I've got about 25 days, 25, 30 days to make a decision here. Oh, you know what? That reminds me. I missed. I still kind of haven't decided what to do with these Junes. I don't know. They were like $1.75 a couple of days ago. So with this being like 0.03 delta, I mean, even if we race up to 400 a share, that's going to be another $65, but times 0.03, multiplying by 0.01 would be 65 times 3, about 19. Yeah, the value on these really isn't going to go up much. Maybe like 210 a share. Excuse me, 210 a contract. Um, but maybe I'll just hold them till the end of the month. It's only another 6 days, and then I'll just cut my losses here. Maybe roll out to September. I've got 25 days to make a decision on the Julys. And let's see. So these Septembers are in profit about 20%. Interesting. Now these are interesting as well. Is there any profit that can be taken here? These call debit spreads that I bought 30 days ago might be able to squeeze a tiny, tiny little sliver of profit. Let's see. What I paid for the spread was about 250, and now the difference is like 280. Yeah, there ain't much there. What are my other call debit spreads? June. Yeah, these are straight garbage. Let me think here. Any other places that I can and should take any profits? I don't think I'm inclined to bother. Maybe if we get to 350, 375 a share, or if we see a nice spike like this to implied vol. All right, so I think I'm done with the joint account. Except that this negative theta is still kind of annoying. If I close both of these and convert to shares, what can I get? 26 grand? Yeah, it's not gonna get me enough to get 100 shares. So I'd have to take some profits in here, I think, to get the rest of the way there. Maybe I'll just do that. All right. I'm just gonna walk this down a little bit, try to keep every little bit of premium I can. I got 27 grand and I need 33.5. 30, 33.6. So I need another 7 grand. Mm. 9 of these. I didn't get an insta fill on that. The hell? All right. Let's see what I'm looking at. Oh, I got an extra $1,000. Probably didn't need to sell that one because now I'm going to sell another covered call. And I probably could have kept that that other covered call on. All right, let's take a look. Still have a negative theta here, which is kind of annoying. I could drop the rest of my 1080s and get pretty close. No, but I want to hold on to those and see what happens. $1,900. That's way too much cash. Um, I guess I could buy I could buy a couple of these Septembers back, or let's go a little farther out. That's perfect. Yes, my negative or net theta ended up a little bit more negative with that, but December it is. All right, Portman's covered call. Nothing to do here. Still got 38 days left on it. Only had it open for a day anyway. Junes are still screwed. Do I close them and roll it out to September? Yeah, I think same thing here. I'm just gonna wait till the end of the month. A couple more days of theta is not gonna be the end of the world. But why do I have cash? Kept a little bit too much cash here. 800 even, so I can't get a September 1080. What's the next month? July. Or I could just buy 2 shares. You actually are allowed to buy shares. You do not have to be a degenerate option trader. It is allowed. What did I just do? Is that always there? Okay, there we go. All right, this is the challenge account. I don't think there's really much I can do here. All my poor ones cover calls. I never took any of these off, so they're still here. What is this? Oh, let me ungroup this. That is both of these covered calls are actually connected to the shares. The 300 that I sold last Friday is getting destroyed. So that's good news for all of my other positions, at least. July's are still underwater. September's are barely breaking even. So that's going to be the interesting dilemma that I have on Friday. I'll probably end up rolling this covered call and then paying the difference. So if I get paid another 1,000 for next week, like if I was rolling it right now, um, I'd owe about 3 grand. So I can sell 2 of these. That's only going to come up with 1,600 though. So I will be in the unfortunate position. I might be able to roll these out for a credit though. Oh, but I've also got shares I can sell if I have to. All right. I think that's about it here. And let's check the chats before I move on to the 5K. Rocket ship. Let's go. You're welcome, Tommy. All right, so let's move it on down. I don't think there's much to do here as well. Let's just double check and make sure. Probably don't have any cash to spend. That's fake buying power. They want me to use margin. All my mining stocks have covered calls on them. Now, this poor man's covered call is kind of shady. Like I didn't go out to a year because on an account this size, I couldn't afford to. So by April 18th or so, I'll have to make a decision on these. Let's see if these have even been profitable. Okay, so these are the leaps portion. Well, the long call portion has been terribly unprofitable, down about 5 grand. I would have to go back through and see how much I've collected on the covered call portions, but I suspect it isn't going to be 5 grand. It could end up working itself out depending on where strategy's trading next month this time. Let's see how my 1080s are doing. Kind of tiny little profit, maybe like 5%. So we will hold the fort there. Yeah, no new trades here. Yeah, you don't have to go all out. And you know what? Let me see. There was one question, and I'm going to answer the guy. I bookmarked it so that I would not forget it. But I got tagged about Tesla. There we go. Somebody somebody called the absolute bottom. It sounds like, and bought um the Tesla 230s for 90. Shit, what day was that? It's like way the hell out there, wasn't it? 6/17/27. Oh, the farthest one's available. So, how do I evaluate whether I'm going to take profits or not? And clearly, I can't give the guy the financial advice. Sounds like he's asking for, but I can just talk about how I decide, uh, you know, how and when to take profits. So there is a shitload of time left on this thing. 6/17/27. And I'm going to check the delta on this, which I'm sure is going to be pretty legit. 0.77. And the reason why I'm checking this is this gives us one extra option. So you can look at um, HODL or sell as a binary decision, but it's also possible, a third option would be to sell covered calls against this position. And for me personally, I would definitely, lean towards that one. Like this one has so much time on it. Theta is so small. Um, I would lean towards one of those two decisions. When you buy a call and you close it, you're selling to close. And when you sell a covered call, You're just selling to open the covered call. Materially, it's it's kind of the same thing in either scenario. You're going to be selling an option and putting money in your pocket. But I would plug Tesla into something like options profit calculator. Let's go all the way out here. It's the 230. And he did not pay that. He paid this. Three of them. And let's calculate. But that is not going to capture all of the range that I'm thinking about. So, like by December 2027, I think this tripling is pretty conservative. So let's just go to like, wait, what's Tesla trading at? Under 300? Yeah, 270. Um, yeah, so if this triples to like 900 a share, this could be insanely profitable. But if some political bullshit goes down, this could be a complete loser, right? So if something happens to the macroeconomic environment or the Fed decides to raise interest rates, which screws over car sales, or if regulatory authorities decided that they wanted to dig in their heels and not approve full self-driving, Tesla could trade sideways for the next 2 years. I mean, anything's possible. So the way that I look at this is what is going to piss me off the most? Taking a, where is it? Was it like a 40% return? Yeah, total return, 40%. Is taking a 40% return and then watch it go to like a 5x return in the dark green chart part of the chart. Is that going to piss me off more? Or is not taking profits on a 40% return and seeing it turn into a loser and just watching it steadily grind into a losing position over the next 2 years? Which of those is going to piss me off the most? And then I would just do the opposite. Um, Having multiples is also kind of nice flexibility because it's possible to just sell one of the three. And now you've booked a 40% return in a week. And you can pat yourself on the back and consider yourself the best trader that's ever lived because that's pretty legit. Um, but it's, the question is, do you have something else better to do with the money? If you're bullish on another ticker, or as bullish as you are on Tesla, and you want to deploy that 12,700 somewhere else so that, you're not necessarily sitting on cash, um, I- unless you just think, the tariff talk is going to cause the whole economy to collapse, then yeah, just take your money and run. Yeah, so obviously I can't say sell, take the 40% and run because then what if the what if the dark green happens over the next 2 years? And I can't say hodl because it's going to the moon because the option could go in here into the red. And you kind of have to accept the fact that no matter what you do, you're not going to time the top perfectly and you're not going to time the bottom perfectly. So it's almost kind of like poker or blackjack. You have to just follow the numbers. And as long as you are making a decent decision. You just have to be kind of, like, okay with being unlucky. Like, if you take some profits here and then it 10x's in the next 6 months, um, you still just kinda have to pat yourself on the back and say, "Look, 40% returns was fine." Or if you're bullish and you end up hodling and losing the money, you have to just kinda go back and say, "Well, was my thesis incorrect?" And if the bullish thesis on Tesla was correct and you just got unlucky because of, I don't know, World War III or something, you kinda can't hold that against yourself. But, yeah, I like having multiples because that way I can just tell myself, "Alright, I'm gonna sell one of my 3 contracts at 40% return or 50% return," or, if I have 4 contracts, I'm gonna sell 2 at 100% return. That way, even if the other 2 contracts expire worthless, the worst I can do is break even. Things like that. So there's always these little mitigating strategies where you can decide what you want to do. If entering into this trade was like, you know what, the what did he spend? 9 grand times three, so 27 grand. If that's your entire life savings and you have it all plowed into leveraged options, I think that's I personally would feel desperate to unload some of that leverage and give myself something, maybe a spot position. But if that 27 grand is like 5% of your portfolio, and if you let it ride and it goes to 0, you really just don't give a shit because the other 95% of your portfolio is fine. That's a completely different risk strategy. So that's another thing that's all a personal decision that every person has to make. Um, but if you want to YOLO and you're like, you know what, I'm going to ride it to 0 or a 10x, and or if you just want to take 40% and take your ball and go home, all of those um, all of those decisions are correct. So you've got a winner. Um, I guess really the only way to lose at this point is if you did hold all 3 of the positions and lost money, and the position was larger than you could afford to lose. It's like if all of those criteria are true, then it would make sense to at least take some kind of profits on that position. Or in my case, with these going, in the money enough that the delta is over point 0.7, selling, well, I just set up a couple of them myself. Let's see, it's 230 and it's worth 130, so 360. So, selling a covered call above the 360 mark, skimming a little bit of profits over time as the price goes up. And then, if we rocket to 400 a share, then you just use that as your sell signal. That's option number 3, I suppose. Take your profits, YOLO and HODL, or turn it into a poor man's covered call. So that's my not financial advice is the best I can do is really just describe all of the options that I see it, and how I go about evaluating that decision. But yeah, I can't be any more helpful than that. So I hope that helps. But I'm gonna actually answer this and basically say everything that I just said out loud. Let's see. What's up, Rob? Consider selling the July 1080s against your June 1080s. Let's see. So about a 30-day calendar spread. I don't have June's in that account. Must be this one. Let me double check this again. Selling the Julys against the Junes. Well, that would be kind of weird for me because every July that I sell, I would be closing out the Julys that I already own. But let me still see if that makes sense to me. Okay, let's just assume I didn't have any Julys. Let me just see what that would look like if I sold it as a spread today. I don't know if I would be able to do those one for one. Did I do this wrong? No, not a long. Wow, what happened to my short call? Oh, because I have. Oh, good lord. All right. Um, I don't know. I don't know. Give me the reasoning behind that. I guess the only way that I could get wrecked is if we went to like what, like 2,000 a share or something. And selling the Julys got absolutely destroyed, and the 1080s might not appreciate enough. I don't know, man. I hadn't thought about it. Higby, you mentioned you had some rules on profit taking. I'm up 153% on April 4th, 315s. I'm stuck. I'm new, never been in the money. All right, so the 4 315s. April 4th. Okay, so that's only 10 days from now. Never been in the money. I love it. I love it. All right, so the 315s. So with only 10 days on here, your gamma risk is getting pretty big. And what I mean by that is if the price fluctuates back down around your 315, you're going to be like, okay, 310 I'm winning, or excuse me, if the price is 310 I'm losing, if the price is 320 I'm winning. And you can kind of get stuck there. I I personally don't hold long calls under like 90 days as a rule anyway. So I don't know how long ago you bought them. You're up 153%. So you probably bought them fairly recently. And so I probably I wouldn't be in making this decision anyway because I probably wouldn't have bought them. And I'm glad it worked out, but I would do the same thing. So this is so if they're worth 3 grand and you're up 153%, so you probably bought them for 10, somewhere between 10 and 15. 315s. And I'm gonna put that you paid 12.50 for them. And let's just say two of them. Yeah, 100% would be 25, and then another half of that, 12. So if the price stays the same, what are we trading at? 336. If the price stays the same, then the price that you'll be able to get is going to go down from 3,600 to 1,800. So you stand to lose half of the profits. Or if the price goes down below 327, you stand to lose everything. So I don't know how many contracts you have, but one of the things that I like to do that I mentioned before is, if I've got 10 contracts and I can double my money, then if I sell half of them for double the profit, then I can't lose money. So that is a consideration. And if we take a look at this chart, right, we're trading at 336 now. And if you hodl and the price stays the same, you're going to lose about half of your profits. And then what could be a reasonable pump? Like, let's just say we go to 400 a share. If we get some amazing pump, right? Like Bitcoin claws back to 100 by next week, and we're looking at like a $400 strategy price. If you sell now at the 100% profit, 150% profit, then you'll miss out on a 600% profit. So what's going to be more painful? What's going to make your guts just twist and turn? Is it going to be selling some at 150% profit and missing out on 600% profit? Or is it going to be not selling and hoping the price goes up and then losing half of your profit or losing all of it? If I follow the penny stock trader turned crypto shitcoiner that I used to follow, he was pretty good at it, so can't fault him for it. But um, Quick Fingers Luke said that you always participate in the bounce, meaning you have to take some profits when the price goes up. Considering that you only have 10 days left on this thing. For me personally, that makes me extremely nervous about the gamma risk. Like, I would just congratulate myself for winning a coin flip, basically. Uh, I don't know what your decision was just to YOLO or, if you were reading about the prophecy and, was just kinda hoping that the price would go up. Uh, but yeah, and just a word of advice, it's usually better to figure out your exit strategy when you enter into the trade. So that would be my biggest piece of advice for a new option trader is, you found yourself in the lucky position of making money, and now you d and now you don't know what to do. Like, you're in a great situation, but now you're panicking because you don't know if you're in a good situation and you should exit it, or if it's gonna be an even better situation. But you can clearly see here that even just right, if we drop down to 315 a share and you do nothing, then you lose everything. Um, but yeah, I don't know how many contracts you have. If you can peel some of them off, guarantee yourself a profit. But in general, I like to think about all of the things that could happen and then do the one that avoids the most pain and suffering. And I can tell you from experience that when November hit and I made enough money, unfortunately, they were unrealized gains because I didn't close all the positions. I had like 8 or 9 x my account from March to November, and then I watched all of those leveraged positions decay, from theta and also from price depreciation, from the price of strategy going from 500 a share back down to what did it go down to? 250 or something. And so I turned a 9x gain into a 3x gain. And I can tell you that watching that happen was like just a knife in my guts. Um, but if you've got stronger intestinal fortitude and you don't mind risking losing all of your money because you want to YOLO on, a 5x return, only you can answer that question. But for me personally, anything under 90 days to expiration is already entering the danger zone. So you're like way beyond the risk that I'm usually feel comfortable taking. So um, I think that's about as much as I can say about that one. So I hope that helps. Victor, letting 5% of your portfolio burn to zero is stupid. Paraphrasing Monty Python. Every bip is sacred, every bip is great. If one is ever wasted, God gets quite irate. Yeah, so that was at 11:59. What the hell was I talking about at 11:59? Oh, back when I was talking about whether you should take profits or roll or yeah. I think I tend to agree with you there. Rob, gotcha. Sorry, didn't realize you had July's. Just thinking of ways to capture some premium if you're rolling to September anyway. Yeah, I'm just wondering about whether I would be able to sell the Julys in an equal ratio. Like if I have 20 Junes, can I really sell 20 of the Julys, or does that um, put me at some risk? Yeah, 100%, 150% profit is always a good trade. Yeah, that that penny stock trader actually used to say that if you break even, it's a good trade just because so many people in the stock market lose money. Like, if you can buy a stock and it goes down 20% and you can just claw your way back to breaking even, he's like, count, your, count yourself a winner just for not losing money because so many people blow up their accounts chasing these insane gains. Like, um, yeah, booking 150% profit in a week or two is insanely good trade. So, let's see. What's your ratio of shares to positions cash on hand? I'm about 80% shares and bullish this year, so thinking about selling some shares to enter more long calls. Yeah, I was so levered and I'm still so levered that I'm desperate to unload leverage. Um, Over the past several months, as Strategy's price has been cratering, you know, correcting basically 50%, I had 2,000 shares. And every time the price of Strategy would drop another 50 bucks a share, I would peel off shares and buy long calls. And so let's see, my ETF delta, my net delta is 3,200 and my shares only accounts for 1,000 of that. So I have about 2,200 leveraged option delta uh, after discounting the covered calls that I have. So let's see, 44, 184, 215, and then double it. Let's just say 500. Yeah, I've got about 500 short delta in my covered call positions right now. So yeah, I've got about twice as much leveraged exposure as actual shares. So I already have way more than I can kind of stomach. So even just from this little small pump from what we were at 270 3 weeks ago, I have been closing my poor man's covered call positions and I added a Tesla position. Um yeah, I mean you kind of have to guess just ask yourself where do you think strategies price will be at the end of 2025. If it's dramatically higher, then shedding some shares for leverage makes sense. I think it's that simple, really. Um, but yeah, I mean, leverage. If we're still trading at 335 at the end of the year, then any leveraged position you take now will be a giant fucking loser. So, um, yeah, it's just plug it into options profit calculator, and then plug in what you think the share price will be at the end of the year, and decide from there. Wouldn't want to be long both June and July. If I'm bullish, I like the idea of spreading the risk into September's and hold the Julys. Yeah, I think that's exactly what I'm gonna do is I don't like my June since they're under 90. Where are they? No, that's my debit spread. There we go. I don't like them being under 90, but I'm gonna give March the last 5 days and to to Victor's point, letting 5% of your portfolio burn doesn't make sense. So whatever I can scrape up with these by the end of the month, I'll just roll them out to September, December, September, December, next January, whatever. I'll roll it out to something. Um, unfortunately, if we do get, if I roll them, if I roll the Junes and then like a week or two later we get a pump to 400, 450, then I'm gonna miss out on all that gamma, which will be unfortunate. But everything in options is a trade-off. So you can't get delta, gamma, theta all in one fucking option, right? You're either gonna trade high gamma exposure for high theta, like in the next 90 days, 100% of this option's value is going to decay out of it, unless it goes in the money, which doesn't seem terribly likely at this point. Um, you know, this pump is optimistic, but to think that we'd be over 1080 a share by June is more bullish than even I can imagine. So yeah, in the next week I'll be making a decision on these and just take my lumps, roll it out, and hopefully learn something. And that's the other thing. Who was it that made 150%? Higby. Yeah, the one lesson that you don't want to learn the wrong lesson, especially winning so much on your first trade, is that's what always happens. Because if we just look at all of my Junes, 90% losers. My Julys, 70% losers. And I've had them for 100 days. So they were over 187 days to expiration. So I gave myself over a half a year to be right with these, and it wasn't enough. Which kind of makes sense because when we had that pump in March, if you bought 6 months to 6 month, you could buy the top here, and as long as you had 9 to 12-month expirations, you were good to go. But if you bought anything that was before September 5th, October, there wasn't like a single long call that you could buy at the top here that would be profitable. You had to go out like 10, 12 months. Like you could do the worst possible make the worst possible trade imaginable, buying leverage at the top, and as long as you gave yourself 12 months, you could um, you know, wipe the sweat off your brow and actually turn a profit in November. But I bought like in here somewhere, like December, January, and gave myself 6 months, and that doesn't look like it's going to cut it. So you don't, being that successful in your first trade, you don't want to learn the wrong lesson and think it's just printing money. All I got to do is buy long, buy long calls, buy short dated long calls and print money. That's generally a recipe for disaster. So, um, pat yourself on the back, congratulate yourself, but it's usually not that easy. Let's see. IV is nearing all-time lows though, so those June 1080s could pop if we start truly moving up in earnest. I get being uncomfortable though. Yeah, absolutely. And that's um and I am mentally struggling with trying to play the revenge game, like when the gambler goes to the table and he just bets on black 3 times in a row, and he's like, "Oh, well, red's gotta come up the next time." But unfortunately, statistics don't give a shit how many times it's come up black in a row. It's still a 50-50 chance. So, um, I would love nothing more than to just diamond hands these things and turn them into a winner. But let's just look and see. So my June 1080s, what do I really need? Because I'm not buying the June 1080s at current prices. I bought them, right? You could make an argument that buying the 1080s now might make some sense if you don't mind YOLOing. Um, but my price per option isn't $1.91, it's like 2,400. Let me look and see. What's the damage? 2454, right? So I have to make up for all of my failure first. Let's go to but we're saying potentially in the money, so like 1,100 a share. Yeah, there's just a sea of red here. So for me to even sniff profitability, um, the June 1080s could pop if we start truly moving up. Yeah. So what if we double from here and we get to 660? Let's do 676. If we don't see 676 by April 28th, basically 30 more days, I'm still, I guess I can get myself to breaking even here. But that's like I need strategy to double in a month for me to just break even, let alone profit. Anything under a double, a 30-day double, I'm still in a sea of red here. So for me, it's kind of like, abandon ye all hope for the Junes. Um, and I kind of look at it as like, most options do expire worthless, but you can make sure to never have an option expire worthless if you never hold it to expiration. And so that's why, even though the Junes would pop, like you said, if we get a sharp move. Actually, you know what? If we did get that sharp of a move, I can bump up the implied vol to, let's just say it goes up 50%. Let's go to 160. Whoops. So that's going to give me a little bit of a boost here as well. Now, what do I need? To be green by April 28th. Now I need 520. So 520, we'd have to be hitting all-time highs again. We'd have to be threatening all-time highs in 30 days. So that's a hell of a lot better than needing it to double from here, but that's still just for me to break even. So I think trying to play the revenge game is is usually a dangerous thing, right? You just think, "Oh, if I just hold it another week, another 2 weeks," meanwhile, theta is just accelerating. Um, so you're absolutely right, it could pop, but it could also pop just enough for me to still lose all my money, right? Let's see, as Jay in the Yield Max said, "It's a great time to be an option buyer in this low IV climate." Yeah, I agree, but, um, buying the June 1080s at a buck 80 is a hell of a lot different than somebody who bought them for 2,400 99 days ago. Those two people are in way different way different situations. Everybody with Junes feels the same. Yeah, hate capitulating on Junes with IV back in the 70s. I know it's brutal. Let's see. In that calculation, factor in an increase. Okay, yeah, that's what I just put in. Um, Cost basis. Yeah, it's a thing. But at the same time, it's kind of like the only way for me to even like I guess if I did hold on to these for another 30 days and the price went to if I was able to sell these for 500, $5 a pop, then I would net lose less money than if I just cut bait now. I guess I guess that's all kind of to your point deeply that yeah, but that's kind of the thing. Is there's once you enter into a losing trade, there's no magic wand that can fix it. Sometimes people respond or will ask a questions like, what do I do with this losing position? Or what do I do with this covered call that I sold the 300 strike and now the price is 336? Well, there's nothing to do with it. You can't do anything about it. Um, that's why you have to figure out your risk tolerance and your expectations and your plan. What are you, when you click submit on the trade and you get that fill, you should already know, what am I going to do if the price goes down? What am I going to do if the price stays the same? What am I going to do if the price goes up? Uh, it's hard to make those decisions when half of the contract is done and the price went in a direction that you didn't want it to, or in was it Victor? Yeah, or in Victor's case, no, not sorry, not Victor, Higby. In Higby's case, the price goes in the direction that you want it to, but you don't know what you're supposed to do at that point. So you got to have your plan ready at the beginning of the trade, not in the middle. Because yeah, I mean you're locked in. What can you do? What can I do with this to make it profitable? Nothing. I either have to cross my fingers and hope, and hope's not a strategy, or tuck my tail between my legs and take my losses and go to cash, or roll it out and sacrifice all the gamma, or just say, you know what, fuck it, I'm gonna hold this thing for another 30 days, and if it goes down to 50 cents a contract, I'm willing to accept, whatever the market gods have in store for me. So yeah, once you make a losing trade, it's that you have to make a decision, but there's no decision that you can just snap your fingers and make and be like, yeah, I'm gonna turn this loser into a winner. It's just kind of stuck with it. Rob says Misty just rolled all their 250, 260 synth longs to May 330s. Okay. So now their base is 330. So I guess they didn't have enough. Yeah, I don't know. I still don't get that. To May 330s. Yeah. The last time I took a look at them, I kind of didn't mind Jay's explanation of return of capital, but I don't know. I've been discussing it with some folks, and they're still they're still not convinced. So I'm actually kind of anxious to for the price to go up high enough that I can just declare victory and unload my entire MSTY position. Uh, I really don't want to hold that position any longer than I have to. I kind of I feel it's a liability, for no other reason than paying them the 1% management fee. So but I probably am playing a little bit of revenge fantasy there because I don't wanna admit defeat. So, I might be riding that position, uh, longer than I would like to, just to make sure that I don't have to take an L. And if I do have to take an L, it means Strategy's price goes nowhere for the next year. That's probably the only way that I think MSTY could be more profitable. And if that happens, I'll be a very unhappy boy in general. And the MSTY challenge will be the least of my problems. Haven't really taken the time to dig into their structure, but seems like there's some unknown risks. I mostly just care about their weeklies. Yeah, yeah, and I love your analysis on those positions. It is kind of wild that one ETF, I don't want to say dictates the market, but yeah. So do they have to? I think I saw a little short video you made. So they must have already rolled. I think their shorts must have been getting wrecked this week already too, right? They already rolled their shorts for this week early. I forget exactly. All right, we are all caught up on the chats. Appreciate everybody tuning in, and hopefully, me adding these covered calls on here was enough to tempt the market into just blowing through every single strike. You know, seeing seeing us pushing for all-time highs by May would just make my freaking year. And my plan, if that does happen, will be to continue to unload leverage and convert those profits into either more strategy shares or Tesla positions. That's my plan for the rest of 2025. So anytime IV spikes, well, on MSTR that is. Anytime IV spikes or the price spikes, I will be looking for opportunities to delever. I'm like way over levered in this account for my personal liking, but I took irresponsibly long a little bit too literally, and nothing I can do about it now. All right. Thanks, everybody. Be good, y'all.